Good morning, everyone. Welcome to our Thursday morning trading room. The markets just opened up, and it looks as though we've got a little bit of a gap down today. As the NQ continues its tailspin, here we'll take a look at it on the Raptor. We'll see what's been going on in the overnight. So we've got a fairly active session here about an hour before the market opened. Actually fairly choppy throughout the night. But that's what I've been looking for. That big decline about midway through the European Open. And like I said, that's going to leave us with a rather substantial gap above the market. So we're going to give these guys a few minutes to settle in, but I'm thinking that, unless they're going to rally right out of the gate, we might be looking for a little bit of a buying opportunity here this morning. Just looking for a place to get in at this point. Gold also continuing its dramatic rally, but gold being a little bit, see, there's the huge rally in gold out of the open this morning. So gold prices opened, well, actually they did a little bit of a seesaw. Gold prices opened up here, fell down, and then we had this big rally here about an hour before the North American stock index opened. Now we're working on a little bit of a rule of three signal. It'll be interesting to see. We could set up to short this. I would want to take it on the other side of the ATR just to be sure, because with this rule of three signal, it's not just the three signals against the dominant band, but we always want to see a test of the extreme before we get too carried away there. So something to keep a lookout for. We've also got a late filter entry signal brewing in gold here on the Falcon. So late filter entry signal, it is now confirmed. We could actually set up to take that one. You can take it on the hash mark. Can I cover it up there? Oh, I can. So the late filter entry signal, what's significant about that is the trend line goes out of sync, comes back, pardon me, the filter goes out of sync, comes back into sync, but the trend line never changes color. That's very important. And there too, the big problem with that signal is the possible test of the extreme. So we're going to let that one kind of work itself out. Crude oil, as I mentioned, pretty much sideways. And let's see if we get another opportunity here on the NASDAQ. Okay, so here's the NQ now, kind of putting in its top, or what's appearing to be a little bit of a top. And are they going to turn over here? No. Oh, all right, so this is kind of interesting. Oops, here comes a red bar buy signal. We got a chance to take that one on a second push higher. So what happened here was our signal actually generated. Everything was in sync here off of this hard edge bounce. I got to the signal a little bit late, but we still were able to take it on the second bar. And it does look as though, oh, they're trying to get up there. These highs here, very important. Once we see a breach of those highs, come on. Oh, they're going to try to retest this hard edge once again. Hopefully this isn't going to develop into a test of the extreme. That could be bad. This is going to be the last chance of the buyers to get their act together, by the way. If it fails at this point, then we're pretty much going to see the market head lower. And what I'm going to do now is I'm going to go with my bar high low strategy, and I'm probably going to leave it a couple bars back. Come on, give me one more bullish bar here. Come on. There we go. You can do it. Get up there. Get up there. You can see Trade Forecaster says we're in full-on scalp mode. So that means that we can anticipate the market to be a little bit more wild this morning. There we go. All right, so we've got that bar. I'm going to roll my stop right to here. And hopefully we'll see the buyers kick in. Get going. So the gold trade worked out pretty well. The market fell off, hit our profit target, but there we go. It's taking a little while now for the buyers to get going here on the NASDAQ. And I think I'm going to get tagged here in a sec. I'm going to give it one more bar. Come on. What a tough bar going on right here. Like such a tug of war. All right, well, we'll see now. Maybe I was a little bit too aggressive with my stop on that one. Perhaps I should have held it back. We do have a rule of 3 now. Funny thing. And you know what? I'll set up to short it just so I can show it to you. No, it's not going to head lower. Or yes, it is. There's the rule of 3. And I'm going to take that on the second push. I'm going to cover above the high. All right, so the rule of 3 signal tells us that we've got 3 signals against the hard edge. We've had our little test of the extreme here, and it's looking like the market is going to head lower. All right, and here we go. We're just waiting for the market to give us a little bit of room, and then I'm going to roll in there with my bar high-low strategy. Again, trend changes are very tricky. You don't want to be too quick on a trend change. Because the market needs some room to turn around. right? You don't want to be jamming your stop in right behind it immediately. But we do have a rule of three. The buy failed, so we'll give them a chance here on the short side. And if they fail here too, well then we've got ourselves stuck in a sideways range. Way to go, Mo! Mo says he took the first micro macro cross and he nailed it for 16 ticks. Well done, Mo. So that would probably be this one right here. Nicely done. Yeah, that first micro macro cross, that's always a high probability signal. All right, so we are drifting a little bit lower here. I'm thinking the bar high low is going to be too aggressive right now, but let me at least go to the swing high. And if we get a little bit of room here, come on. Oh, look at this. All right, so here come the buyers. Now I'm going to be on the alert for the sellers. I may be wrong about the trade, but once the sellers show up, I'll know it'll be time to get back on board with them. Oh, shoot, if they give me a chance. All right, so there are the sellers. We're going to go with the bar high low now. The logic here is that if the sellers lose control at this point, yes, they may recover the market here still, but then again, they may not. So we have to make a decision where we're going to pull the plug on the trade. We're not always right, but the least we can do is try to minimize our exposure. Ay, ay, ay. No, there they go. All right, so it's going to be like that, is it? Well, it is scalp mode, so I guess I shouldn't be too surprised that the market is chopping around as much as it is. Like Tony says, scoundrels. Absolutely, Tony. They are scoundrels. All right, well, let's just give this here a moment. Okay, so we got a little bit of work to do now. All right, so there, while all that was going on, it looks like we had a couple decent signals here on the Raptor, a nice little cloud crossover signal, as well as a good late filter entry signal here on the Falcon. And both of those had decent follow through. It's starting to look as though they might be trying to get into that opening gap after all, but we'll see. Opening gaps, they certainly influence the market. And the big question is always, is the market going to try to get in there early? Or is it going to get in there late? Almost had the first micro macro cross again here on the Hawk, but you see that got spoiled by the yellow bars. Yeah, Mo says the Hawk is playing out well so far, and that's what you might expect when the market is this choppy, is that a tool like the Hawk is going to perform pretty good. But all this choppiness as well is a sign of a lack of momentum. I'm watching here the Falcon, or pardon me, the Raptor and the Falcon, both starting to unwind a little bit. Here's the Hawk again with another first micro macro cross. I would probably take that one down here. Can I cover it up there? Yes, I can. The reason I want to risk it this far is because the trend is waffling, right? We've seen a move higher, we've seen a move lower. 1, 2, 3, 4. We're also working on our 4-arrow consolidation now, so hopefully that will have some follow through to it. And now they're getting back down here to where all the buyers were. And here we come back with yet another signal. So time to start rolling this stop in. I can probably bring it into there. You can see they're just hovering above the break-even trigger. If you wanted, you could be a little bit more aggressive still. In fact, I didn't even get a chance to do that, but nice little move there. And, oh, there's that signal I was waiting for on the Raptor and on the Falcon. So we had two nice little sell signals, and these were all both preceded by that test of the extreme, that little retest right there. Tony asked, didn't the NQ open with a gap up? No, it's actually a gap down, Tony. The market, hold on a second here, I'm just going to check. The market closed yesterday at, hold on, I'm going to get the exact closing price for you. Son of a gun, stop that. The market closed yesterday at 39.67. And it opened this morning at 39.08. So that's almost a 60-point gap down in the overnight. Polly asked a great question here. How can you tell if the market is choppy? All right, Polly. The simplest way to tell if the market is choppy is, well, just observing the chart. So for instance, if your price bars start in the top left corner and go to the bottom right, you're in a downtrend. If they go from the bottom left to the top right, you're in an uptrend. And little zigzags along the way don't matter much. However, if you get more than 2 of those on a chart, you no longer have a trend. And you see, that's kind of what we're in right now, where the market is kind of waffling back and forth, and we don't really have a trend. Now, that's one way to identify whether you're in a choppy market. The other way to identify you're in a choppy market is if you take a quality signal and it doesn't follow through. I forget what was the first trade. I think it was this one right here. So we looked at taking this signal. It came up short of our profit objective, and I think we ended up taking a little bit of a loss on this one. I should have been more aggressive with my stop as we got near these highs and the market stalled. But when you take a quality signal and it doesn't follow through, okay, well, the signals aren't 100%, so you think, all right, maybe, you know, it was just one of those things. Well, then we come back with yet another quality signal, this test or this rule of 3 that should have headed lower, and then the market failed on that one also. So we've had 2 quality signals fail on the Eagle. That tells me that the market is choppy. You can also use, if you happen to have the trade forecaster will tell you what your current market condition is, as well as what the next one is likely to be. So right now you can see the trade forecaster says we're in full-on scalp mode right now, and as such, we can expect the market to be a little short on the follow-through side and maybe a little more whippy on the exit side. So we need to keep our stops a little bit further away and maybe keep our profit targets a little bit closer. You can also check your filter. You see how the filters are breaking up very frequently. You see, when the market is trending, the filter doesn't break up. It breaks up once in a while, but not to the extent of what we're seeing now. Let me go back here. So there you go. You can see our filter, nice solid block, and we get a little bit of a breakup. But so long as it's trending well or not choppy, it doesn't look like a chessboard. And that's going to be true for all your tools. The Hawk, of course, a little bit more responsive. And actually the Hawk providing decent follow through. But this is what choppiness looks like on the Hawk. Your filter really broken up. A lot of yellow bars printing here. And they're going to print at more or less the same latitude. And ditto on the Falcon. You can see we got that little mountain range going on, right? We got an upswing, a downswing, an upswing. Is it going to continue? Or are we just going to alternate swings now? Is it going to swing lower? Here too, our filter is breaking up not quite as dramatically as what it is. There we go. Okay, so your trend line looks like a roller coaster. Your filter breaking up. That's how you can tell you're in a choppy market. Now, the best thing to do when you're in a choppy market is actually just to wait it out. There were some decent signals here, and it looks like they're starting to, well, I was going to say, at least offer some decent ranges. but maybe not. The best thing to do when you're in a choppy market is to let the market get outside of the chop. Let it get outside of the chop. Let it wait for it to retest. It will, maybe not immediately. Well, sometimes immediately, but usually it will take a little while. It will retest. It'll come back. It will give you a signal. That signal is the one that you can have confidence in. They're going to try to entice us now to buy at the top end of the trading range. All right, so there's the breakout. So let's see now what we get for a retest, if anything. Doyle is asking a question while we're waiting for this Falcon chart to maybe retest. Doyle asks, maybe it's a support question. However, if it's easy, I would like to know how to mute the signal caller. Sure, Doyle, nothing to it. Now, are you looking to mute? I don't know if you guys can hear my audio alerts or if you're just looking to mute your own. If you're looking to mute your own, what you want to go do is go here to your indicator panel, and you want to find your tool, in this case the Falcon, and then down here where it says audible, sound enabled. Oh, wait, you turn that to false. And that will disable the audio alert. Then when you're happy with that, just apply it and you're good to go. Good morning, Jim. Jim says, oh, the advance decline a little bit lopsided, 400 on the buy, 2,400 on the sell, but that would be due to that big opening gap that we saw. Crude oil sparked a rally. Had a little first micro macro cross here in crude after they got outside of their itty bitty trading range. All right, so here now we have a red bar buy signal. We have had what resembles a test of the extreme. Now these red bar buys, you can use it as an early warning or you can set up to sell the failure. The nice thing about the red bar buy signal is that it's usually close enough that you can cover the trade above the high. So if the trade, you'll know for sure that the trade has failed if the market now reverses and heads above this high once again. Oh, and there's a first micro macro cross, hot on the heels. Looks like we got another chance to get in on that one. Can I cover that above the high? The danger here is, what I'm worried about is a larger retest of this high. After all, the market has been in a bit of an uptrend, right? Okay, that's now moving into a macro pullback signal, and I'm too late on that one. But it is going to work out. Get down there. There we go. So a couple opportunities there on the hawk. And I bet you we had a raptor signal also. Yes, we did. There's our soft edge sell on the raptor. And we would anticipate that the market's going to move here into the hard edge, which is exactly what it's going to try to do. Oh, and now we're drifting again. So a lot of stuff going on here. Market really searching for some direction. Oh, we got a late filter entry signal here on the Falcon. So we could look to take that below the low. I would feel a little better about doing that, shorting it below the low. We're kind of tucked underneath the median line here, which will hopefully offer some resistance to the upside. If you wanted, here I'm going to show you what Omar likes to do. He likes to use these support and resistance lines as profit targets. So we're going to be really aggressive here. I'm going to use the primary support line as my profit objective, and I think it's probably time to get this trade to break even. And we would have hit our profit target by now. Yep, we just hit our profit objective, our high probability target. Hopefully this won't swing too much and we'll actually be able to see this market trade a little bit lower. And maybe even get to our target down here at the primary support. All right, well, I think it's time to go with something a little bit more aggressive, stop-wise. So you see there was a little bit of buying going on here, buyers showing up a little bit early. That would all be due to this area right here. Oh, and it looks like they did manage to press a little bit higher. But a good trade all the same. Fantastic, Mo. Mo says, Eric, I have 4 16-tick trades in a row on the first micro-macro pullbacks on the Hawk. Truly a fantastic instrument. I know that first micro-macro cross signal, it is a high probability signal. I always say you can make a living just on that one signal alone. It's not the frequency of the signals, folks. If you haven't heard my little rant before, you don't make more money by trading more often. I know it makes sense on the surface, right? If you're in the brick and mortar world or in the non-trading world, the more you do, the more you earn. Right? You make more widgets, you make more money. But in trading, the more you trade, for every single trade you take, you increase the chances that you're going to take a losing trade. So even though today, the follow through has been great, that at least we've been able to get, just taking the first micro macro cross as a for instance, we've been able to hit all our profit targets on the first micro macro cross signal. Hopefully if this trade did move against me, I would be able to adjust my trade somewhat to maybe have less than the full $300 stop loss hit. Like for instance, let's pretend now we're going to put my stop right here. We're going to put our entry right there. All right, let's say I hadn't hit my profit objective yet. So now I'm looking for a chance to roll my stops. Well, right here is my chance. You see right there where the market made a couple of moves in my favor. I have an opportunity now to roll my stops, and I would roll it at least below this bar here, and now at least to break even and probably higher. So while I started with $300 initially, I had a chance to lessen it by half and then maybe only have about $50 at risk. So even if the trade did not work out, I still wouldn't take the whole $300 hit. And that's very important. But it isn't the frequency of the trading. You're going to get days like today where it looks like, you just go in with both hands and you just grab all the signals and you'll be fine. But in trading, less is more. I'm looking to take between 2 and 5 trades in a day. And what I'm looking to bat 1,000%. I'm looking to bat 1,000. I want to be on for every single trade. I want every single trade to be a winner. And if I do incur a loser, I want it to be minimal, for obvious reasons. Yeah, like Mo said, you take a teeny amount of heat, but it still worked out. And that's another important point. When you're placing your stops, like let's say we're looking at this, well, this is actually a macro pullback signal, also a high probability signal. But you usually don't want to place your stop right there. You want to give yourself a little bit of room. Yes, you're reducing your profit, but your profit is no good to you if your stop loss gets hit first. Right? It's not profit until you actually book it. Now, it looks to me what I should have done this morning is, knowing I was in scalp mode, I should have taken my own advice and held my stop back a little bit. No, was I enough to ride it out? I forget exactly where I placed my first stop. I think right about there, and it would not have been enough. The market made that final dip lower. All right, never mind. But that's something to remember. When you're in scalp mode, you need wider stops. It looks like we're wedging up here a little bit now, and maybe, just maybe, we're going to see this market turn over. We are getting a rule of 3. We are getting a retest of the highs. This bar that's forming right now is actually going to be our signal bar if it trades lower, because what it's doing is we're currently against the ATR, and you can see we're just about to produce another signal here, and what I'll do is I'll take it below there where the signal will print, and we're kind of in a bit of a sideways pennant type formation right now. So the market consolidating somewhat. This is very much a leap of faith, because selling the bottom end of the pennant like this is difficult because the market might reverse and go higher. How do I know that? Well, we're in a sideways market. And very often with these flag type formations or these pennant type formations, the market will resume whatever the trend was going into the flag or the pennant. So in this case, well, I guess it wasn't that strong of an uptrend, but it was a little bit of an uptrend coming in. So here they are now fighting it all out. We've broken the trend line. We've had our lower high, which is what's made me a little bit bearish here. The band on the eagle is crossing over, and I think we might actually, oh, spoke too soon. I was going to say, I think we might actually catch a break. Yeah, here Jim sums up pretty well what's going on today. Jim says I was short and I was holding down over 60 ticks. Came out with a positive 1 tick. Break even. Crazy swings today, and that's exactly it. Just wild, wild swings. So the buyers and sellers still pretty evenly matched here, which is not good for my trade. Tony says, Eric, on the Eagle chart, your chart shows bars both hollow and solid. My chart shows them all solid. All right, well, we'll just let that kind of simmer there. I'll bring over another Eagle chart. We're going to check the settings. So we'll go here to the Eagle, and yours is probably turned to false down here where it says hollow up bars. Yours probably says true, or it says false. So you'll want to change that to true. And then click apply. And voila, you should have hollow body bars. All right, we're still taking some pretty serious heat on our Eagle trade. And they're honoring the top end of the trading range so far. Looks like we might need to adjust this line somewhat. Seller's got to show up here sometime. Here we go. All right, so once again, you know, the sellers have shown up. It would probably be wise to start rolling my stops a little bit. I'm going to try to leave it 3-bar back. No, stop it. I don't want it to roll quite that fast. parabolics are going to give me a little bit more room at the outset. You see how they're a little bit slower to get started, and then as the trend starts to lose momentum, they come up very quickly, which is what I want. I don't want it to get too aggressive here right out of the gate. All right, we're back now to where we started. And I'm doing my best not to panic. Seems as though we filled that opening gap, so maybe we're ready for a move lower. We had a sell signal here on the Raptor, and we're getting yet another first micro macro cross here on the Hawk. And that one also moving back into a macro pullback type thing. Very, very choppy. See all the yellow bars again? See how the filter, you know, and now we're into yellow bars yet again. And Jim's offering a little tip. He says he's using the Raptor with the equivolume bars. And he's using these areas because he knows that there's a lot of buying and selling going on because of the equivolume bars. So he says a good place to short and cover. And he's up 105 ticks doing that. Well done. I have a feeling the market poked its head a little bit too high, though, and tagged my trailing stop. Oh, yes, it did here on my parabolic. Sometimes a quick stop can just be deadly. You know, sometimes what you got to do is just leave that stop there and don't touch it. And I'll admit that's a little bit of a problem for me. If there's one thing I do wrong, I have a tendency to tweak myself out of a perfectly good trade sometimes, and I have a bad feeling that's what this is going to be. All right, so here comes the Falcon's kind of waffly still. As is the Raptor. You know, I'd love to tell you, I have a pretty good notion that the market will try to head lower from here, but honestly, there's no clean signal here just yet. Look, our band is twisted up like a piece of rope. Okay, so here comes the Raptor. And we've got our cloud crossover. We'll see now whether they come in here and offer us a retest. No, they're not going to. Well, there's another first micro macro cross in the hawk. This one you'd have to cover back a little bit again in case this develops into a macro pullback. We just breached a significant support level here. So remember what I told you, when the market is ranging, what we want to do is we want to let it break out and retest, and then look for that signal after the retest. So if you took this first micro macro cross, you'd have to allow for a little bit of heat. Now what I'm going to do is I'm going to look for the retest signal, which is coming. And it's not quite a macro pullback yet, but can I cover it up there? Yes, I can. And what I'm looking for now is for this breakout to actually hold. And we might be getting a cloud crossover signal here on the Raptor, in which case I'll just get ready to short it. Come on, you guys. Play nice. Where's my signal? I might have to go a little bit higher still. Let's see, do we have one on the Falcon? Oh, here we go. We're going to work on a possible late filter entry signal on the Falcon, and maybe even a trend change signal here on the Eagle. There it is. There's the sell signal on the Raptor. Oops. Well, I got some positive slippage on it. The signal engaged right here. I was a couple ticks late hitting the sell button, but that could work out in my favor. Oh, and I guess I'd better get a stop loss in play here. Okay, so right now the problem spot down here, 39.35, and stop doing that. I have to mute my microphone here for just a second, folks. It wasn't supposed to roll my stop in that quick. I wanted to leave my stop up here. Oh my, the market is choppy today. What a whip show. All right, there it is again. And now we're going to make sure our stops are there. And now we're going to leave them there. All I'm trying to do is I'm trying to keep the stops out of the way. If we can break the this low here, then we should be in good shape. There we go. We've taken out the low. Let's get going. There we go. So we've hit our first profit target. I'm going to take the trade to break even now. And I'm going to enable the ATR strategy because everything else seems to be too aggressive today. Yeah, the volatility is good, Jim. Jim says, I love the volatility, but it's emotionally draining, especially doing this all week. But he's up 725 ticks. Well done. Yeah, it's these monster swings, right? You just trying to ride those bad boys out. Excellent point here, Mo. Mo says, Eric, would it be easier to take trades perhaps an hour or so after the market's open? That way the craziness settles down a bit? Yes. You know what, Mo? Most times I'm only in the, okay, how do I put this? When I trade, I usually trade from the top of the hour. So I ignore the first half hour of trading. I don't trade then. And I'll wander into into my office late on purpose to avoid, doing something silly like trying to take a trade right out of the open. But of course, everybody thinks that you got to be there when the market opens, so that's why the trading room opens when the market opens. Does that make sense? But I agree. I think there's nothing wrong with just ignoring that first half hour of trading altogether. An hour late might be a little bit late. Those first 15 to 30 minutes can be a little crazy. And after that, the market does tend to settle in sometimes and pick a direction. If there has been a dominant trend through the day, it will usually reverse on itself an hour into the session. So we're here right now. It's 7:30 here on the West Coast, 10:30 in the East. And if the market has a dominant trend on the day, very often you'll see it reverse now. But we haven't really seen a dominant trend, so I don't think that's going to be a factor today. Yeah, Mo says it could be better on the nerves. Yeah, absolutely. I just find that the market tosses you a lot of knuckleballs out of the open. That's why I kind of monitor the opening gap. If it's going to do one thing, it's going to try to fill the gap. That's about the one thing that you can be sure of. Okay, so we're seeing a little bit of a pause in the action now, a little bit of sideways movement. Hopefully my stops are far enough away to ride out the swing. And we will, now the obstacle is down here, 39.23 3/4. We need to see somebody take 39.23 half. There it is. There we go. Who's your daddy now? Come on, get going. There we go. Oh, Jim, you got a bit of a fan club here. Tony says, wow, 700 ticks for the week so far. Equals a hero. Congrats. And you should pat yourself on the back. That's well done. That's a lot of hard work. So we're just kind of nursing this trade along. Come on now. Don't be like that. Let's go. The NQ dragging its feet a little bit, and, well, if it takes out this high, yeah, there we go. All right, well, that's okay. It was a good trade. It was a very good trade, had good follow through on that. I'm not so sure we're going to see much of an uptick, though. The market did make a rather pronounced move lower there. A little deliberate. All right, now we're going to drift back into the hard edge. A couple more comments here. Mo says, I'm only mentioning that for us newbies in the market, meaning that not trading the first half hour. He says, guys like Jim probably love the volatility at the open. It's, yeah, it's a two-edged sword. You know, some of my best trades have come at the open. Sometimes the market just tees it up and it looks so obvious. You know, you get a clean signal out of the open, especially on the Eagle. That's why I did the Eagle trade. The Eagle is usually one of those tools that I will trust the signal that we get out of the open. So here the market opens up. I get the red bar buy. I was anxious to take it, or actually I guess I got in on this one here. I should have got in on this one. Oh, that one, sorry, was just a couple minutes prior to the open. Here was the opening signal on the Eagle. So the market opens, we get a with trend signal, a hard edge bounce, and that's the one that had the follow through. 5 minutes later, I get the red bar buy, which also should have had enough follow through, but that one failed. But the Eagle is one of those tools that I will entertain the signal right out of the open. More often than not, though, you know, I'll let the dust settle a little bit. I'll wait out at least the first 5 or 10 minutes before getting too aggressive. Jim says, I figured it out. I'm over 20,000 hours in learning how to trade futures. When people ask if they can do it, I tell them good luck and put in the time, not to mention buy the DTS system. I wish I could remember who the trader was. He was an Italian trader. He was a very good trader. And I saw him on a documentary, but I can't remember his name. But I do remember what he said. He said, if you want to learn how to trade, watch the charts for 8 hours a day for 10 years, and you'll know how to trade. And his advice, I don't think he really means that you have to sit there for 10 years, but the point is that you have to put in some screen time. You have to get familiar with your tools. You have to get familiar with the market you're trading. And the markets, they have personalities. The NASDAQ, the Dow, the Russell, the E-mini, the mid-cap, they're all going to move more or less the same. But they also have their own little quirks. For instance, on the mid-cap, the red bar buy is a very strong signal. Whereas on the NASDAQ, it doesn't necessarily have that much follow through. It'll have enough follow through to hit our high probability profit target, but that's about it. Whereas on the mid cap, if I get a red bar buy, it may develop into a full blown trend. That's why I also suggest that when you're starting out, pick a market, any market, really. It doesn't matter. I'm fond of the NASDAQ and the mini Dow because they're only $5 a tick, and there's decent volatility and follow through. But if you want to trade the Russell or crude oil or gold or soybeans or whatever, hey folks, it's your money. You put it where you think you're going to do your best work. All right, so now we're kind of stuck again. See, we're getting a lot of yellow bars. We're drifting a little bit. The Raptor here too looks like a mess, as does the Falcon. Oh, yeah. Tony says, put your big boy pants on and trade the DAX. Yeah, that's not a market for wimps, that's for sure. There was a young lady, I guess that's a sliding scale, right? As you get older, but anyway, she was a 20-something, super successful day trader, and she was German. And I'm sorry, I don't remember what her education was. I think she was self-taught. And she was one of the best Bund traders, that's B-U-N-D, which is a German or European interest vehicle, similar to like the 30-year bond or the 10-year note or something like that here in North America. Those are good instruments too, especially for those of you starting out. Not the 30-year bond, but something like the 5-year or 10-year note. Very smooth moves. A lot like watching paint dry, but you don't need the volatility. You don't need the action right out of the gate when you're starting. All right, so here we are again. We've got a couple sell signals. We had the first micro macro cross here, and that looks like it had some follow through, and I missed the trend signal here on the Eagle. Oh darn, I was waiting for the late filter entry signal here on the Falcon, and I looked away just as it printed right here. Late filter signal combined with a trend change signal, and that looks like it had no trouble finding our profit objective. And it looks like prices are going to try to slip a little bit lower still. Kind of test the lower end here. All right, well, we'll let them do their thing as crude oil prices continue to slide. Gold still in a little bit of a rally. Oops, shoot. I was just going to show you this late filter entry signal here on gold, which printed right here. You could probably cover it below the low. I'm probably gonna, pardon me. I'm just throwing the signal in now to demo it. I don't usually chase a signal this way. If I miss it at this point, I'll wait for the next signal. However, for the sake of the room, I'll throw it in there so that we can demo it. We got a little bit of slip on that, didn't we? Stinkers. So close to the break even. Come on, give me one more green bar. We actually hit our break-even trigger, but we got slipped a couple of ticks here. So I'm going to let them ride it out, see if they don't come back with yet another late filter entry signal. The buyers do need to show up here. We're going to see a little bit of support probably come in at this point. All right, well, they're floundering around a little bit. I need to close up the room a little bit early today, folks. I've got a meeting at the top of the hour that I need to get ready for. So we're going to pack things up. If you are trading this afternoon, well, what do I tell you? The trend is down. So I would expect the stock indices to head a little bit lower, which means that a market like gold should continue higher, and crude oil will probably continue to slip lower as well. All right, you guys, I'll catch up with you tomorrow for our Friday morning session, and I'll see you then. So be careful. We'll talk to you later. Bye for now.